Good morning, traders. Today is Tuesday, the 7th of October, and I'm Alex from BCR. So let's walk through today's markets. The US dollar index bounced back above 98, reaching around 98.5, its highest level within a week. This rebound comes as markets react to the ongoing government shutdown, which delayed economic data like the jobs report. Meanwhile, traders have almost fully priced in a Federal Reserve rate cut later this month, with a second cut expected further on in December. All eyes are on upcoming Federal Reserve speeches from officials such as Chairman Powell on Thursday, which could guide near-term market directions. Technically, the index reclaimed its 100-day moving average at 98.19, a key resistance level. But if it drops back below 98, this could slide further towards last week's low of 97.46. This also has additional support levels at around 97.2. US oil is trading near $61.50 per barrel after falling 7% last week. So this is the worst weekly drop in about 3 months. This comes as OPEC announced a modest production increase and Iraq's Kurdish pipeline is reopened. So this is increasing fears of oversupply. The bearish trend is supported by expectations of rising global oil inventories, weak demand signals, and ongoing geopolitical shifts. This includes peace talks in the Middle East. Technically, oil broke below key support level at $61.50, with the next support levels being at $60.22 and $60 respectively. So resistance is now seen at $62 and the 9-day moving average hovers around $62.68. So gold is surging, climbing over $80 to hit an all-time high of $3,970 an ounce. So investors are piling into safe haven assets due to the rising global uncertainty from the US shutdown to federal rate cuts to shifts in Japanese politics. So in just 10 days, gold has soared past the $3,900 mark. However, technical indicators like the RSI may show that it has been overbought. So this may be hinting at a possible short-term correction where support lies at about $3,900, then $3,864, and then $3,800. However, on the upside, a break above $3,970 could hit a target of $3,980 and then hit that psychological level of $4,000. The Australian dollar is holding slightly above 66 cents, supported by a rebound in inflation. September inflation rose 0.4%, hinting that price pressures may be more persistent than expected, especially in the Australian services sector. The RBA kept rates steady last month, but markets are now cautiously pricing in only a 40% chance of a rate cut in November. Technically, the Aussie is in an ascending channel, showing bullish momentum. So if the pair pushes higher, look for a move somewhere towards the 66.60 mark and possibly 67 cents. And support lies somewhere between 65.45 and 65 cents respectively. That concludes today's morning review. So keep your eyes on the US Fed speeches, any shutdown developments, and the OPEC headlines, as they'll be key drivers for this week. So trade safe, and I'll see you in the next update.